Ladies and gentlemen, good day and welcome to the Eco Recycling Limited Q4 FY24 earnings conference call hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Chandni Chande from Kirin Advisors. Thank you, and over to you, ma'am.
Thank you. On the behalf of Kirin Advisors, I welcome you all to the conference call of Eco Recycling Limited. From management side, we have Mr. B.K. Soni, Chairman and Managing Director. Now, I hand over the call to Mr. B.K. Soni. Over to you, sir.
Thank you so much, Chandni. Good afternoon, ladies and gentlemen. I am delighted to extend a warm welcome to everyone joined us today for this conference call to talk about the fourth quarter and annual results for the quarter and year ended 31st March 2024. I am joined by Manisha Jena, our Company Secretary, and Sanket Munde, our Accountant. EcoReco is India's premier e-waste management company, which started the journey of e-waste recycling almost 20 years before, with a very clear focus to follow globally accepted practices, which meets the standards set by the MNCs and global brands in the electrical and electronic manufacturing segment. EcoReco has always believed in innovative practices and setting up the industry benchmark, which meets environmental and ecological obligation of all the stakeholders EcoReco. EcoReco never believes in cutthroat competition to achieve higher volumes of tonnage, but high level of services to its clients who does not hesitate to pay as per their standards in the developed countries. EcoReco provides all the services under the umbrella of e-waste management, beginning from collection to compliances, to all its clients, whether MSMEs or MNCs, producers, and other generators of e-waste who desire to dispose of their e-waste as per the norms of the e-waste management rules and Environment Protection Act. As you better know, producers of electrical and electronic equipment have an additional obligation to collect or get the e-waste collected to meet their extended producer's responsibility, commonly known as EPR. Although EPR was first introduced in 2016 rules, but EcoReco started its participation when CPCB launched an EPR portal to transfer credits to producers through this digitized and documented mechanism. I am pleased to share that in February 2024, a new capacity of 18,000 metric ton per annum to recycle e-waste have been established, and also got the permission from the Maharashtra Pollution Control Board as a consent to operate at the new premises of EcoReco in Vasai, Maharashtra. There may be some obvious curiosity. What was the need of setting up a new capacity when the earlier capacity of 7,200 metric ton is still pending to be fully utilized? I would like to clarify and inform that India generates 5 million metric ton of e-waste presently, and looking at the obligation of the producers as well as of the large corporate consumers of electronic devices, the demand will surge with the time, and therefore having a facility with higher capacity in place well in advance, and that too out of the internal non-interest bearing funds, is the best approach to avail opportunity as and when crops up because of the stricter implementation of the rules and circular economy policy of the central government. It takes almost 1 year to build a green shoe facility, and if EcoReco awaits orders from clients versus approaching them with the higher available capacity, gives a leverage above the competition. It may not be out of place to mention that Ecorico is confidently widening its wings to reach with the global MNCs to service them for their e-waste generated in their India offices. Looking at the credentials of our company, I am proud to share that Ecorico became the first member of TERA, the world's premier network of e-stewards and R2 certified e-scrap and IT/AD service providers. This milestone is a recognition of our commitment to pioneering sustainable e-waste management practices in India. I am pleased to further share that Ecorico has geared up its action awareness drive among the individual consumers, shops, restaurants, schools, and other establishments. In this direction, on Global Recycling Day, Ecorico and Book My Junk deployed 5 teams equipped with tailor-made vehicles for collection of e-waste from the above consumers and collected an impressive 10,940 kilograms of e-waste from almost 1,000 such generators, including MSMEs, shops, restaurants, and others, who prefers responsible disposal practices of such hazardous waste. Now let's talk about the financial highlights of Q4 FY24, and I hope all of you had an opportunity to go through the numbers. In Q4 FY24, your company's standalone revenue surged impressively by 78.33% year-on-year basis to 8.56 crore, and EBITDA reached to 4.29 crore, reflecting a remarkable year-on-year growth both in absolute numbers and in percentage terms. Moving to FY24, standalone revenue continued its upward trajectory and grown by an impressive 52.26% year-on-year to 32.63 crores. EBITDA for the year reached to 21.10 crore, resulting in a 2,911 basis points increase. Profit after tax for financial year 24 stood at 16.20 crores, demonstrating notable year-on-year growth of 162.56%. There are several factors which have contributed to the growth. The increasing awareness of extended producers' responsibility obligations amongst other companies who were at the fence so far but envisaging a stricter provision of environmental compensation are gradually joining the bandwagon. You will kindly appreciate that our fully compliant facility support to major global brands in meeting their EPR obligations commands a premium for our services. The increasing success of EPR rules is a confirmation of acceptance of government policies and approach. This further justifies our gradual investment in infrastructure and technologies to be ready to avail rising demand and growth in revenue from e-waste recycling and EPR fees. I am proud to share once again with all, but more particularly who may not know, that Ecorico's efforts were lauded by the Prime Minister Shri Modi ji in his 97th Mann Ki Baat on 29th January 2023. Similarly, on 2nd October 2023, Dr. Jitendra Singh, Minister Central Government, had flagged off India's very first and so far the only recycling on wheels smarter facility in Delhi, introduced by Ecorico. Looking ahead, we remain dedicated to enhance capabilities to meet the expectations of the clients and authorities by delivering our services which they can compare with our global peers. We are keenly exploring opportunities in emerging markets, in emerging e-waste market abroad, evaluating strategic partnerships and business with multinational corporations and brands who are committed to follow global best practices to safeguard their brand image and local compliances. I strongly believe and with full confidence that the policies and practices chosen by Ecorico will establish Ecorico as a preferred partner among all the stakeholders to avail its services with greater trust, which will eventually lead to a significant growth. As you better know, the journey of e-waste recycling is very long, and generation of e-waste will only increase in proportion to the consumption of electrical and electronic devices, digitization, automation, and central and state governments' policies. With the above note, I express my gratitude to all our stakeholders for their kind support and trust in Ecorico and its innovative initiatives. I now open the floor for questions with a request to kindly raise one question per participant. In case you have more questions, we may take up offline at a mutually convenient date and time. Thank you so much for your kind attention and patience. Chandni, it's for you to go ahead.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Once again, ladies and gentlemen, as this conference is scheduled to be for 1 hour, we request you to please restrict your questions to 1 question per person. We will now wait for a moment while the question queue assembles. The first question comes from the line of Shubham from Ayush Agrawal Research. Please go ahead.
Hi, good afternoon, everyone. Thank you for the opportunity. So, sir, currently, what is our capacity utilization for the plant? Previously, you have said that you are focusing on low capacity utilization with high value. So, are we moving forward with that particular strategy, or are we changing our strategy to move towards higher capacity utilization? Thank you.
Okay, Shubham, first and foremost, as I mentioned earlier also, that present capacity utilization is close to about 4,000 metric ton out of 7,200 metric ton, which is nearly about 60%, which actually speaking, we were hoping to reach to 75% by June quarter itself, and then we are hoping to reach 75% to 80% by June, current quarter, and then also will further increase our capacity utilization out of the 18,000 metric ton what we have set up.
Okay. Thank you. I will rejoin with you.
Thank you. The next question is from the line of Jishan Singhi from Krijuna Research and Analytics. Please go ahead.
Thank you, sir, for the opportunity. First, I would like to ask that if we see in the financial statements, your other income has been decreased. So, what does it constitute? I would like to ask that.
Sorry, can you repeat your question, Mr. Singhi?
What does that other income constitute in the financial statements?
Okay, got it. Okay. So let me give the brief breakup about the other income. Okay, so this is consisting of 3 elements. One is obviously the income from investments to the tune of about 2.15 crores. And second is a fair value of the investments what we have made is about 2.45 crores. Put together, they consist of 4.6 crores. And there are small gains from dividend and income from interest and all. So 4.6 crores is consisting of that.
Okay. Thank you. And next, I would like to ask that for your lithium-ion batteries, that which process do you use in your this plant for the lithium-ion batteries recycling?
Okay, so it's a dry process what we use and up to black mass only. The facility has been set up to only make the black mass, and further for that technology we have tied up with CMAT, Hyderabad, for the chemical process to be adopted at later on. Once the capacity utilization is of significance level, that time we will utilize the chemical processes. But at this point of time, we are just going for the black mass.
Okay, so that means if once you are away with that chemical facility, then what will be your average realization?
It's difficult to say because the price of cobalt and other metals keep fluctuating a lot, including the prices of the dead batteries also, you know.
Okay.
So price prediction is very difficult, but yes, we safeguard our margin all the time.
Okay. Okay. So going further, what will be your revenue mix in terms of this e-waste and recycling of lithium-ion batteries between them?
Oh, yeah, okay, I'm taking up this third question from yours, but otherwise kindly restrict it to one to others also, please. Okay. So you said the revenue from e-waste recycling, right?
Yes.
In the next year, you mean to say?
Recycling and this lithium-ion battery plant. It's going further.
That I'm sorry, I won't be able to discuss the projections with you at this point of time.
Okay.
Yeah. Thank you.
Thank you. The next question is from the line of Viraj Mahadevia from MoneyGrow India. Please go ahead.
Hi, Mr. Soni. Encouraging performance over the last year. However, I'm surprised that the revenue in Q4 has not seen a meaningful uptick, given that EPR is online, given that most of the electronics players are looking to comply and recycle their waste. How come some of that hasn't shown up in the revenue base? And also, have you had any EPR revenues in Q4?
Okay, so let me tell you, the EPR portal, which really started only in the month of 19th of March. Sorry, it was shut down from 19th March to 20th of April 24. So hardly 15 days revenue was booked in the EPR portal by all the recyclers, which did not meet all the obligations, whatever were given to us by the producers. And those have been made after the restart of the EPR portal on 22nd April to 27th April, we make out that obligation. So you will see the difference, the kind of EPR fees in the current quarter of the running year.
Understood. And why didn't we see a ramp up in tonnage in Q4, to my same question, of core operations of recycling?
Yeah, that is a core operation of recycling does not mean always that the tonnages has to come. If I keep buying the freezers and washing machines, which hardly generates me a profitability of 10% versus the laptops and the other electronic devices, which gives me handsome margin, I believe as an investor, both of us will prefer to have the high margin business rather than only capacity utilization.
True, but has the high margin business not started coming yet?
Request you to please rejoin.
No, it is there. It is doing. We are doing it to the extent whatever we are capturing from the market. So it's not that the competition is not playing its role, but we do the business only with the multinational companies who agrees to our kind of profitability rather than the volume. So if I give an example, if suppose I work for a margin of 15-20%, then I could have done a business of 10,000 metric ton as against 4,000 metric ton. But the profitability would have remained almost same. So my preference is to do 4,000 metric ton and earn the profit as against 10,000 metric ton. I believe that's a good policy, and I would certainly like to have your opinion on that.
Sure. No, I think that's a good policy. The question, sir, is only why has this low-sized electronic material not come your way meaningfully, given that policies are all in place, is my simple question.
Correct. Yeah.
I'll come back. Thank you.
Yeah, please. Thank you.
Thank you. Ladies and gentlemen, we request you to please restrict your questions to one question per participant. The next question is from the line of Ayush Agrawal from Ayush Agrawal Research. Please go ahead.
Yes, sir. I just had a question regarding the EPR piece. If you could just quantify how much of it has been collected and the guidance for the same in the coming future.
Good. Ayush, we did a business of 1.5 crore of EPR in the March quarter, and I won't be able to disclose the tonnages associated with this because that's the USP of Ecorico. And the remaining in as far as the first quarter, what we booked in the June quarter, it's substantially higher than what we have booked in the March.
Okay. Thank you, sir. I'll just join the queue now. Thank you.
Oh, nice. Thank you.
Thank you. The next question is from the line of Parav Jain from Nivesha Investment Advisory. Please go ahead.
Hello, Suni sir. So congratulations on receiving this Terra Group affiliation. It is a really good advantage that we have. So my question pertains to page number 12 on the investor presentation. So on that page, we have mentioned that Ecorico can now recover valuable elements such as nickel, manganese. So in this terms, are we looking to change our business model in terms of supplying the black mass and now switching to directly recovering these metals and then selling them ourselves? Is that the way forward? Is that correct?
No. That is the futuristic plan. Okay. Presently, we are limiting it to only to the extent of black mass. And what you are reading on page number 12 is the technology what we have acquired from CMAT is capable to do that.
Okay. So for the near term, at least we'll still be dealing in the black mass only.
Correct. So the reason being that the supply and the demand both have to match with the economics.
Right. So just a small question on this side. What would our mix be for this quarter? Data destruction, refurbishment, and recycling.
So in the previous quarter, we did the business of data destruction of around 1 sec. So that is close to about 10%. We did the business of data destruction, and we hope to continue the 10 to 12% in the current quarter also.
Okay, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Anmol Grover from Master Trust. Please go ahead.
Hello, good afternoon, gentlemen. Am I audible?
Yes, Mr. Anmol, go ahead.
So I just wanted to understand your performance. First of all, congrats on a phenomenal year. Congrats on your capacity as well. I just wanted to understand the margin dip that has happened this quarter and what to expect going forward.
No, I don't think, Mr. Anmol, there is a margin dip, but you will kindly notice that the tax provision, income tax provision and everything put together. So after profit after tax has come down by that amount only. And we have provided for about 1.5 crore in the first 3 quarters and raised it by about 2 crore in the last quarter. So the impact is because of that.
Sorry, I missed the initial impact is because of what?
No, I said that the profit after tax is lower, as you are noticing, is because of the impact of the income tax, which was provided for in the last quarter to the tune of about 2 crores.
Okay, no, but your EBITDA margin also did. So, in Q3, we did a EBITDA margin excluding other income, which was 70%, 45% this time. So, that's what was my question on.
No, EBITDA margin has not come down. It is far good. What is the percentage you are looking at? 45%?
45.7% to be precise. About 3.7 crores of EBITDA.
Okay, I'll check on the number
This is excluding other income, just to be clear.
Sorry?
I'm calculating EBITDA excluding other income, just to be clear.
Yeah, of course, excluding other income only. So let me just look at the percentage. I have not noticed it carefully. 1 second. So EBITDA is up by 2,911 BPS.
I was asking quarter on quarter because we were doing consistently about 50% margin, but it dipped this quarter, so just wanted to know the reason for that.
No, I'm sorry. Quarter on quarter basis might be a variation. Yes, you are right.
Yeah.
But
So,
overall, it
is it sort of a cyclicality thing that's happened in Q4 is usually a little lower margin for you, so, or is there something else? Just wanted to understand this.
no. So repeat your question, Anmol.
I just wanted to understand, so like I said, your EBITDA margin has dipped to 45, which was above 60% consistency over the past few quarters since you started ramping up your capacity, right?
Mm-hmm.
So I just wanted to understand, is this a quarterly cyclicality that we are looking at for Q4 might be a lower margin quarter for you generally, or is this just a one-off blip because of some other reason? And maybe because of the fire that happened in January, and just wanted to understand the reason.
No, I don't think there is except probably some kind of inventory change might be there, a sale of the items may be there. There may be difference between the two items. That is the reason why. But anyway, I will look into. But overall, it is maintained a good level of.
Yes, I mean, overall for the full year, you have done very well. And just wanted to know if you could give some guidance for next year. And that's all. Thank you.
Thank you so much, Mr. Go. Thank you.
All right. Thank you.
Thank you. The next question is from the line of Namish Gupta from Namish Gupta and Company. Please go ahead.
Hello.
Yes.
Sir, is my voice audible to you?
Yes, please go ahead.
Okay. So you just informed that you have booked a EPR of 1.25 crores in
1.5 crore.
1.5 crore, correct?
Correct.
So, I mean, have your sales decreased in March quarter from December 23 quarter?
No, it's not like that. See, the EPR fees is what we upload on the portal of the CPCB, That is what the fees, what we can charge to the customer. We have done the business and the production and sales, everything was there up to 31st March 24. But since the portal stopped working, and therefore we could not pass on the credit to our customer between 19th March to 20th April 24. And therefore the the EPR fees did not get generated in this last quarter.
So there is no change. I just want to clarify, sir. I mean, have we, in this revenue of 8.05 crore, have we booked EPR credit revenue of 1.5 crore in this, or it does not?
No, it is there. It is there in that.
If it is there, then I am asking, sir. I mean, last quarter our sales was around 7.47 crores. So if I reduce by EPR sales, I mean March 24 quarter sales, then our sales has reduced. So that is why I'm asking the reason of decrease.
No, you are absolutely right. And as you rightly mentioned in between, on 15th January there was a fire. So almost for 1 month the operation, we could not do the sales. So that was one of the reasons. You are right, absolutely right.
Okay, fine. Thank you. Thank you, sir.
Thank you so much.
Thank you. The next question is from the line of Ashish Soni from the family office. Please go ahead.
Sir, last few quarters you have guided that your capital utilization will go up in next 2 years to 100%. So how optimistic are we to achieve that? Because there is some blip this quarter, right?
No, I don't know where are you getting these numbers of the deep and all. But anyway, coming to March 25 and March 26, as I promised, we are very hopeful that 50% capacity utilization by March 25 and almost 100% capacity utilization by March 26 will be achieved. But what I'm understanding from the communication of other investors, also including you, that capacity utilization in terms of tonnage is more important it looks like, versus the policy at Ecorico is high value recovery from lower capacity utilization and keep the capacity unutilized for utilizing it for high value items all the time. If I block my capacity with the low value item and generate a margin of 10-15%, and I fail to avail of the opportunities of the high value material coming in, then I believe my profitability will be lower, my dear sir. So we have to decide on one particular policy together about capacity utilization or profitability.
Okay. Other thing is this TERA certification, that membership you got, right? So how much headway does it give against competition in terms of attracting new brands or new customers?
Great. This is one of the finest things. So, TERA is a global body which has about 110 recognized recycling facilities, mainly in USA and other developed countries. In the Ecorico is the only company in India, or from India, is the only part of that 111 now. Okay, and this TERA is a connect between the recycling facilities in USA and UK as to Ecorico. So whatever the clients are there in the USA and UK who are working and having their offices in India, those directly comes through those members to us. That is the purpose of this. Now we are just 3-4 months old in the membership. We are developing relation with the about 100 members plus and trying to get the business from them, which will eventually be apparent to you probably in another 2-3 months time.
Basically, you are saying your marketing expense goes away indirectly with this membership. You are getting direct customer entry. Is that my reading?
Not only that, but you get connected to, because you are recognized by a body which only recognizes those which are compliant.
Okay, thanks. All the best.
Thank you. So nice. Thank you.
Thank you. Ladies and gentlemen, in order that the management is able to address questions from all participants in the queue, please restrict your questions to one per person. You may rejoin the queue if you have follow-up questions. The next question is from the line of Anirvan Sarkar from Max Life Insurance. Please go ahead.
Hi, sir. Thank you for the opportunity and congrats on a good quarter. So my questions are an extension. Yes, sir. So my questions are an extension of the questions that have been already asked. And I'll just take a minute to just try and see, there seems to be a gap in our understanding or that of the investor community in what you are trying to communicate and how we are seeing things in terms of forming a view about our future potential of revenues and profits. So the reason we have been asking about tonnage and capacity utilization is because if we refer the earlier phone calls, then we have been told that, with increased capacity coming in and, the utilization also coming in, we should expect realizations of 130-140 rupees per kilo. And let's say for 25,000 ton capacity and 50% utilization, we should expect something like maybe 125, and we do the math, it comes to around maybe 175, 180 crore of revenues in the future year with a 50% capacity utilization. Now, however, we are hearing that even with low capacity utilization, we are earning revenues from some other high margin businesses, and it's a little difficult to forecast revenues or, model in the future profits and revenues based on this. So the question remains that, how do we model our future revenues, independently from capacity utilization? And of course, the question also remains that, the 18,000 tons capacity addition that we have spoken about earlier, what is the timeline for that? Is it the same is it getting done by June this year or is it getting delayed a bit further? And yes, where should we expect utilization to come in at for the full year?
Super. Thank you so much, Mr. Sarkar, for framing the question so nicely. And it would be a pleasure to answer you this. Okay, so let me put it differently. The capacity utilization per metric ton, what should be my margin? If I just ignore for a moment to clarify your question only, instead of tonnages, if I say how much profit I should make per ton, and in my calculation, as I mentioned earlier, it's 140 versus 100 rupees purchase and 140 rupees kind of revenue generation, right? So we are making a EBITDA of 40 rupees. And if you look at the kind of profitability now, it's 16 crore kind of EBITDA is there. Okay, 16 crore gross profit is there. So, it's about nearly 4,000 metric ton equal to that. And if I reach to a profitability of 40 crore, I will have impliedly it is a 10,000 metric ton of the tonnages have been handled, which may be lesser because of the high margin and high value what we prefer to do. It may be higher tonnage of 20,000 metric ton if I restrict my margin to 20 rupees a kg. Okay. then my capacity utilization will be 80% with 20,000 metric ton. Now, but if I can earn the same profit of 40 crore out of 10,000 metric ton and capacity utilization remains 40%, then I believe, and in my opinion, the policy is good enough at our end. I do understand from your point of concern that how do you project the future profitability, on what basis. So I'll suggest the yardstick of rupees 30 to 40 per kg you should apply to the profitability for while working out on the tonnages.
Right. Thank you. So should we assume that for FY24, now since you are again modeling it on tonnage only, so
when I'm saying, I'm sorry to interrupt you, when I'm saying 12,000 metric ton of capacity utilization by March 25, there may be possibility that entire 12,000 metric ton material also comes in of high value. Okay, in that case, my margin will be much higher than what I'm saying, giving the number. But assuming 40 rupees a kg, it should be profit should be 48 crore, 50 crore kind of.
Right.
Right? So let's be hopeful of achieving all the things.
Sure, sir. And about the timeline of the 18,000?
Yes, correct. So 18,000 capacity has already been set up, Mr. Sarkar. And utilization, as I mentioned, 50% should be through by March 25 and close to the 100% by March 26.
Oh, thank you, sir. I'll come back.
Okay. Pleasure.
Thank you. The next question is from the line of Advait Joshi from Rising Star Investments. Please go ahead.
So regarding our collection centers, are we planning to do our collection centers pan-India so that we can get some retail inputs like mobile phones, laptops, and which are higher margin?
No, Mr. Joshi, collection center does not help you in collecting high quantity. It is direct courier and direct transport from the consumer or from the customer is better than storing it in the different locations where the chance of pilferage or leakage is much higher.
But we are planning to increase collection centers because right now we are having very few collection centers across Mumbai or pan-India.
No, we don't have collection, even a single collection center in Mumbai or anywhere. We have collection boxes set up in schools and colleges.
Boxes, right. So we are planning to do that to increase the number of boxes in
Yes.
institutions or the places where we can get the laptops and all.
Absolutely. From 5th June itself, you will see that kind of movement is happening.
All over Mumbai and pan-India.
No, not pan-India, only all over Mumbai.
Mumbai
itself has a population of 3 crore, which is significant.
Right. It is to our location, that's why.
Initially we are planning for 100 immediately, and maybe plan to reach to 500, but only in the city of Mumbai and nearby municipal corporation.
Okay, thank you very much.
So nice. Thank you.
Thank you. The next question is from the line of Chirag Jain from Yogya Capital. Please go ahead.
Thanks for the opportunity, sir. So my question was majorly on the broad industry perspective. Can you throw some light on the competitive intensity with similar focus of yours? And new players coming in, or what's the current players' competitive industry intensity? That's what my question on.
Chirag, it's a very beautiful question. First of all, I admire that. And let me confess and say that unfortunately, I don't have the statistics of the other players. The reason being, we are the only listed company whose figures are publicly available, and I don't have an access to their numbers. So it's difficult for me who are in comparison or in competition. So but what we prefer to follow the policy, which I have a number of times over this call we have mentioned, and our policy is not the capacity but the profitability.
Not by numbers, but by general competitiveness in terms of qualitative number. Qualitatively.
Qualitatively, in what sense? You mean to say that what kind of percentage margin they are making, or what tonnages they are doing, what?
Yeah, so that's what my question was on.
So, there are a number of companies which we know through Google and all other this public domain, that there are companies who are doing a business of 100 crore and 200 crore, and their profitability is close to about 10 crore to 15 crore to 20 crore. So these are the numbers available what in public domain is. Now, I don't know how do I say in qualitative terms to this.
So to add to that, in terms of are we competing with them in the same market? How do they source? How are they different? Is there any difference in sourcing or selling? So that was my broader question.
So my point since beginning is the same. We deal with the multinational companies and the brands who are following globally the best practices of paying to the service providers for all their services, right from collection to data capturing to transport, packaging and inventorizing and giving them all the details so that they can follow the global best practices, and we charge for all these things. And I do not know about other competitors of mine, how do they provide the service to their clients.
Thank you. The next question is from the line of Vinay Sharma from Upper Circuit Investment Services. Please go ahead. Vinay Sharma, the line for you has been unmuted. You may proceed with your question. As there's no response from the current participant, we will proceed to the next question, which will be from the line of Ashish Soni from the family office. Please go ahead.
Sir, last few con calls you mentioned your contract with this MNC brands, and when you spoke about this capital utilization of like 12,000 ton maybe by March 25 FI, so you're saying high value. So is it contract? It depends, like it's a mixture of lot of things, or do we get only high value because you have signed a contract, if I recollect, maybe 2-3 con calls back? So what is causing the hesitance like that we won't get high value or we are picky? What's that? I'm not able to understand that.
Okay, so let me clarify this point once again. And for future also it will give a guideline to all. Okay, what I mean by high value is IT devices, communication devices, as against washing machines, fridges, oven, toaster. These are low value and volumetric material. If I take 10,000 metric ton of volumetric material and process and earn 10 to 12% kind of margin, and still my top line remains about 40 to 50,000 rupees per kg max to max, because maximum items are plastic and iron, ferrous and all, containing copper also to some extent. So I am saying 40 to 50 rupees a kg. That will give me a top line of 40 to 50 crore against 10,000 metric ton. Okay, and a profitability of about 5 crore rupees. This is what is the low value item. So my tie-up is not there with electrical and electronic devices to a great extent. It's only a nominal agreement we have with two companies only for a limited quantity. But otherwise, my maximum contact is there with the IT and communication device companies. This is the significant difference.
Basically, indirectly, you are saying maximum your contract is actually high value only. It's like some nominal based on whatever terms of the contract you have done. You have to oblige them based on the contract or maybe relationship wise. Is that maybe 90-10 sort of thing, if I assume, just for assumption?
Broadly, yes.
Thanks, sir. All the best.
Thank you, Mr.
Thank you. The next question is from the line of Sachin Shah from Sun Advisory. Please go ahead.
Hello, good afternoon, Mr. Soni.
Good afternoon, Mr. Sachin.
One question is, I think in this quarter, roughly the volumes would be about 1,000 tons. And if you can split that volume between your processing at your own factory and then at the third party, which is the international, because in the last phone call, you had also explained that the volume is split between your own factory processing and internationally with your tie-up processors. So if you can split the volumes for Q4. Thank you.
Super. So let me give you the number. I don't have ready in terms of the tonnages what we did last year with the international partners, but we made a profit of in the revenue you will see about 4 crore revenue we have received only from the business we closed with the multinational companies sitting elsewhere in the world, not in India. I'm talking about the recyclers, not the multinational company. I'm sorry. So this recyclers, whatever the business we downloaded to them of our clients, we made a net profit of, net revenue out of that is of 4 crores. And that in case of, if you apply the same principle of mine of 40,000 metric ton, is close to about 1,000 metric ton. That is what we did the business. I hope to do at least 2 times of this business in the running year, in the current year. If I have answered you completely about this.
No, thanks, Mr. Soni. What I was trying to find out in Q4, the 1,000 metric tons which is shown as the volume, that I think also includes the third-party processing. So I wanted to understand what is the whole processing, right?
Proportionately, it may be about 200 to 250 metric ton in that quarter, against 1,000 metric ton in the whole year.
Okay, got it. So effectively, it's 750 of own capacity being utilized out of
Correct.
1,000.
Correct.
Okay, thank you very much.
Pleasure.
Thank you. Ladies and gentlemen, you may press star and 1 if you wish to ask a question. The next question is from the line of Yatin Kapoor, an individual investor. Please go ahead.
Yeah, thank you, sir. So my
Yes, sorry to interrupt, Yatin, but you are not audible at the moment.
Can you hear me now?
This is better. Please go ahead.
Okay. So my question is regarding specifically in Q4 each year, we can see that we see a negative income, other income specifically, whether it's 24, 23 or 22, and similar trend can be seen in cost of material. So any reason for that our other income is negative each year, Q4, and cost of material Q4 each year?
Let me just have a look at the number. I don't think there is a negative in this side, this quarter also. Last year it was March 24. Yes, you are right. Other income is negative by 39 lakhs as against 213 lakhs in the previous. 18 lakhs. Yeah, you are right.
Yeah.
So that may be because of the fair value. It's only impact of the fair value during this March quarter probably, but otherwise there is a substantial gain from the investment to the tune of 1.82 crore in this year and 2.57 crore in the last year.
Thanks, sir. And anything specific for the cost of material, because we haven't increased any further cost for each year. So this year it's roughly 2.1 crore. Last year it was 1.7. Our in the previous quarters were.
So 2.18 crore is the cost of material consumed for this quarter, yes. And then you said for the March quarter, December quarter you are comparing with, or March 23, 1.7 crore.
Yeah. So I'm saying that every Q4 we can see a higher cost comparing to the previous quarters. So this quarter you can see 2.1, whereas last quarter was just 90 lakhs. So why is such a big spike in cost of material?
I don't think, Mr. Yatin, it has a direct relation with any quarter one. Quarter-wise any relationship, but it may be coincidence that in the fourth quarter only this kind of things have been noticed by you. But there is no quarter-wise as such. Might be a type of material what we have received, and maybe of a much lower the price or much higher the price in different quarters. So depending on that, maybe.
Okay. Thank you.
Yeah. And as you better know, I must clarify further, as you better know about that in scrap, you never know the quality and the quantity when it comes to have the kind of recoverable material out of that. It is only out of the experience you judge the value and you get the material. So there may be some variation quarter to quarter. Yes.
Okay. Thank you. Thank you, sir.
Pleasure.
Thank you. The next question is from the line of Shweta from Equilon. Please go ahead.
Hello. Yes, am I audible?
Yeah, please go ahead.
Yeah. So I have a question regarding the, collection of the high value equipment that we are looking at, like laptops and all. Are we having some marketing or advertising plan for the local people besides the boxes that you said, is there some buzz that we are going to create? Is that in planning? Because how do people engage and know about it besides the Instagram page that you have?
Okay. So, Shweta, we did a lot of such exercise in the city of Mumbai and neighboring municipal corporation area. The response of the social media was completely zero. Hardly 1 or 2 inquiries through the social media we received. Therefore, we decided to set up the collection boxes in the schools and colleges, where generally speaking, the family members do visit. The children who goes to schools and colleges do come to there regularly. And once they will see these boxes, then there is a direct awareness and direct action will be there. And there you can go and deposit, because schools and colleges generally are in the vicinity of your residences, So that is what we felt that is a better way to reach the general public and to help them out in disposing their e-waste in an environment-friendly manner. But you will see some kind of movement with effect from 5th June itself, when we are launching it at a larger scale.
So I have a suggestion. Recently, I visited SBI branch and there I saw like a box. So if we have tie-ups with like banks or something like where local people can be reaching more frequently, because banks are some places you go pretty often. Things like that. Like we can think of innovative things like that is one of my suggestions.
Superb. Thank you so much, Shweta. We will keep it in mind, but our experience speaks that if the boxes are there in the educational institution or spiritual places, there are always chances, because the family members do visit regularly, and there are no chances of any leakage or taking away anything out of the box. Otherwise you will never find the box also around. So these are the chances we don't want to take, and therefore we have chosen schools and colleges.
Great, sir. Thank you so much.
Pleasure, Shweta. Thank you so much.
Thank you. The next question is from the line of Manthan Javeri, an individual investor. Please go ahead.
Yes, am I audible?
Yes, please.
Okay, so my question is regarding why the depreciation cost is negative in this quarter?
Which cost?
Depreciation.
Depreciation. Okay.
Yes.
So that is because of? Okay, no. Let me just clarify this. So there is a lease asset, am I right? On the lease asset, the provision what we provide as per the Indian accounting standards, the rate what we used to apply for of 13% has been reduced to 8% because the lease liability was increasing substantially, which was not in proportion to the value appreciation of the property. So therefore, the depreciation is negative this time. Year-end adjustment.
Yeah. And coming back to the question of these margins, so our margins is quite volatile on quarter. We were doing 60% margin from Q1, and then we hit EBITDA margin of 70% in Q3, and suddenly the margins have dipped to 45%. So first of all, any reason behind this particular fall, and what will be the sustainable margin band that we can work with going forward?
Okay,
I'm talking about EBITDA margin.
Okay, so I take your second part first. We always focus on at least 40% kind of margin. That is first thing.
Okay.
Second, in case of scrap collection, when it happens or the generation, it happens at the end of the corporate or the producer. You never know the permutation combination of scrap material. It's not a homogeneous material. I'm not a laptop manufacturer. I'm a laptop collector at the end of the life. I'm not a CPU producer, but CPU collector at the end of the life. So whatever gets generated at the end of the big corporates or producers, that is what we collect. So that permutation combination keeps changing. If you will further analyze, on month-to-month basis, you will find a variation. On week-to-week basis also, you will find variation, because there is no standardization of the scrap material. So I believe you should compare on year-to-year basis rather than on quarter-to-quarter basis. So that will be a good yardstick probably you can get, because then you are getting all seasons are along with that, all the quarters and all the months together.
Okay. So basically, what we're trying to say is that we can work with the margins of like 40-45% in a minimum margin of 40-45%, and then it can vary depending upon
focus. 40% is our minimum focus all the time.
Okay. Okay. And this last question, coming to this capacity one. So our capacity operational is 25,000 as on date. Is that correct? Operational capacity.
Yeah, operational capacity setup is of 25,200 metric ton. Yeah.
25,200 metric ton.
Installed capacity.
And of that we are estimating the utilization of 12,000 metric ton for the full year of FY25. Is that correct?
Yes, you are absolutely right.
And if we exclude the EPR credit revenues, is it safe to assume the blended realization of that we outsource and our in-house of like 100 to 110 per kg?
Sorry, the last part I didn't understand.
So I'm asking for this 12,000 metric ton, the blended realization, if I exclude the EPR credit part, is it safe to assume that it will be at least 100 per kg or 110 per kg?
Sorry, I won't be able to answer you. Then it will be talking about what is the rate of EPR,
No, that's what I'm asking. That's what I'm thinking. I'm asking excluding EPR credits. That's why I am not asking for EPR credits. I'm just talking the pure recycling tonnage business.
No, I understand. So EPR credit is generally in the market is around 10 rupees to 15 rupees kind of kg per, EPR fees. Is what market practices are there. Eco doesn't work on such kind of low fees.
Yeah. So blended realization, like we can work with the 100 rupees per kg. That's what my question is like for 12,000 metric tons. It's safe to assume that we will do at least 100 per kg. Okay, I'm not counting EPR credits.
Yes, that is there otherwise also.
Okay.
In fact, we have higher than that.
Okay. Fair enough.
Thank you.
Yeah. That's it, my friend. Thanks.
Okay.
Thank you. The next question is from the line of Uday Kota, an individual investor. Please go ahead.
Hello. Am
Hi,
I audible?
Yes.
Nowadays in Bangalore, I'm seeing a lot of e-waste collection boxes in all the software companies. Since there are many software companies in Bangalore, are you planning to expand to Bangalore, at least for collection purposes?
We don't mind setting up Uday over there also. But then who will be taking care of the collection on regular basis? Who will be investing in these boxes? How the boxes will be preserved and in terms of that protected. So these are all question marks which are really needs to be answered before I can say yes to you.
Thank you. Ladies and gentlemen, we will take that as our last question for today. I would now like to hand the conference over to Ms. Chandni Chande for closing comments. Over to you, ma'am.
Joining the conference call of Eco Recycling Limited. If you have any queries, you can write to us at research@kirinadvisors.com. Once again, thank you for joining the conference.
Thank you so much, all of you.
Thank you. On behalf of Kirin Advisors, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.